The market is bullish on Nvidia, but should investors be? Nvidia has undergone 5 stock splits over the past 24 years. The company's CEO Jensen Huang aims to broaden the company's global reach. Investing in this semiconductor giant is a great move, but caution is warranted. Let's dive in. How confident should Nvidia investors be heading into 2024? Welcome to Timely Investment Research. Backing Nvidia, the leading chip manufacturer in the generative AI boom, has proven lucrative in 2023. The company's H100 and A100 chips are in high demand. And while these chips may face competition from AMD's promising new chips, Nvidia stock is launching its H200 chips, an upgrade to the H100. These chips are expected to be commercially available in second quarter 2024. Both companies competed for market share in the sector. Nvidia's H100 chips have been in high demand. AMD stock has remained resilient, indicating the market's recognition of AMD as a strong competitor. Investing in both Nvidia and AMD offer potential gains in the generative AI and large language model space. That said, investors might be wondering, is Nvidia a buy now? Let's look into the numbers and recent updates on the company. Possible stock split. Nvidia has undergone 5 stock splits, with the latest being a 4-for-1 split in July 2021, proving successful. Announced when shares were $560, Nvidia stock surged past $800 the following month. 2 years later, Nvidia shares surpassed $400 again, surging to more than $500 per share a few months ago. Presently, Nvidia shares carry a higher price tag compared to most mega-cap peers, exceeded only by a few massive American companies by market cap. Regardless of stock splits, Nvidia remains a leading company in AI innovation, driven by high demand for its H100 GPUs. Tech giants like Microsoft and Meta Platforms recently acquired over 150,000 units of Nvidia's chips this year, leading to prolonged delivery wait times. Wall Street anticipates Nvidia's revenue to double to $90 billion next year. These stock splits indicate just how fast Nvidia has grown in recent years. However, such companies always warrant caution from value-based investors given the heightened valuation multiples such companies often trade at. Plans for expansion in Vietnam. Nvidia CEO Jensen Huang announced plans to enhance partnerships with Vietnam's leading tech firms, emphasizing AI talent development and digital infrastructure improvement during his first visit to Hanoi. Huang expressed interest in establishing a second Nvidia base in Vietnam. Having invested $250 million in Vietnam, Nvidia collaborated with top companies to advance AI in cloud, automotive, and healthcare sectors. This commitment also aids supply chain diversification and aligns with deepening U.S.-Vietnam diplomatic relations amid U.S.-China tensions. Nvidia shares, having tripled in value this year, were 1.7% lower on Monday morning. Nvidia's valuation is high, but not crazy. Nvidia's current price-to-sales ratio is higher than in late 2022. But its current multiple of 25 times is still below its longer-term average. The company's recent top-line growth acceleration contributed to a decline in this ratio. Additionally, Nvidia's trailing price-to-earnings ratio of 61 times is slightly lower than the 2022 year-end multiple of 62 times and well below its 5-year average of 77 times. Considering Nvidia's growth in the past and ongoing fiscal year, buying this stock remains a compelling option for long-term investors. Nvidia concluded fiscal 2023 with a flat revenue of $27 billion. In the first 3 quarters of fiscal 2024, it achieved almost $39 billion, an 85% year-over-year increase. The fourth quarter revenue guidance of $20 billion suggests a potential year-end total of $59 billion, marking a significant 118% rise from fiscal 2023. Nvidia is currently growing much faster than the previous year, justifying its valuation with rapid revenue and earnings growth. Notably, the stock's forward sales and earnings multiples are more favorable. Buying Nvidia stock, but be smart about it. Surging demand for Nvidia's AI graphics cards is driving growth. Despite supply constraints, the company increased production each quarter in the past year and plans to triple the flagship H100 AI GPU's output next year. A more powerful chip is also in the works, indicating potential for further revenue acceleration. Meeting analysts' forecasts with $90 billion in revenue next year, Nvidia's market cap could reach $1.8 trillion. representing a potential 60% increase. Investors contemplating buying this AI stock may find an opportune moment before further potential jumps. I'd recommend waiting for dips before entering this stock, as it is pricey. But over the long term, there's a reason why investors have been rewarded for owning this name. Thanks for spending some time with us today, Timely Investment Research. We're so glad you did. If you found value in today's video, please give us a like, hit that bell icon to never miss an upload, and hey, don't forget to subscribe.